This conference will now be recorded.
All right, good afternoon and welcome to the Clear Lines training session. This is a twice weekly 1-hour training session offered to subscribers of the Clear Lines indicator or to those wishing to learn more about the indicator. This session is every Tuesday and Thursday at 3 o'clock Eastern. Today is the last day of January 2019. Welcome. Good to have you with us. Again, my name is Kipp Cohen, and I am the developer of the Clear Lines. Just to give you a real quick, brief review, the Clear Lines indicator was developed basically to help the wise trade community that was happy with the buying and selling momentum, buying and selling pressure charts of the wise trade software. I worked with a developer that had created, or he had worked on the wise trade software. He helped me to develop this. It is not identical, obviously, because I don't own the algorithms. It is pretty darn close. It has some additional features that wise trade didn't have, like the crossover arrows that you see on the chart, the up and down arrows. And of course, we run this on a third-party platform, Medved Trader. The Medved Trader guys were kind enough to let us integrate into their platform. And we are finding that it has been a wonderful marriage of the two products because of all of the additional features offered through Medved. Obviously, that does create a little bit of a learning curve for some of you that were used to the real simplistic program that WiseTrade was. And you can keep the great thing about Medved is you can keep it as simple and basic as you want, or you can make it as fancy and complex. Depends on your own personal preference. And so that's why I'm here twice a week again, Tuesdays and Thursdays, 3 o'clock Eastern, to answer your questions and to assist you with utilizing our Clear Lines indicator on the Medved Trader platform. I do have a couple of questions already today. Connie had sent me an email that she had asked for me to cover today. So I'm going to read this and then we'll kind of go through it. And then I have another question that came in from Tim in the Equity Alerts webinar today that I will share as well. I don't think I have the exact question. I'll have to dig back through, but I'm from memory remember what it was, which kind of coincides with what Connie had asked about. So it's a good day for this. So let me read Connie's question first, and then I'll see if I can find Tim's specific question from the webinar. If not, maybe he'll. Oh, yeah, I found it. Okay, so Connie says, can you show us how to enter a trade through the Medved platform, Clear Lines, where you can enter on a limit order and then set a stop and limit at the same time where one cancels the other one once either stop or limit is filled, right, which is a bracket order, assuming your initial buy short order is filled to begin with. Does that make sense? Sort of like the TTO order type that was on the MBT platform. Thanks. I'm not sure if you may forget. So, oh, okay. Thank you. Thank you, by the way, Connie. And then Tim, oh, there is Tim. He says, hey, Kip, Tim here, asked about understanding Clear Lines better. So I think those are two good questions. Understanding and learning how to interpret the Clear Lines and then actually trading with it makes sense. The two questions are definitely go hand in hand. So first of all, Connie, the order types are going to be limited based on your broker and what your broker provides. So like right now, I'm tied into my Ally account. So it's going to allow me to make orders based on what Ally allows, but that's only based on Ally API. So API is basically application programming interface. And it's sometimes different than what they allow on their website or on their own platform. Sometimes they limit it. But you can see that you can place a market, a limit, a stop market, a stop limit, a trailing stop, a market on close, and a bracket. So what I would have to do in reference to what you were asking me is I would have to set a limit first or a market order and enter the trade. And then once I'm in the trade, then I would need to place my bracket order. Now, the great thing is that I can actually set one and then stage the other kind of simultaneously. Okay. So I'm going to use X as an example, and only because it's bouncing off a pivot. This is not this is just a random. I'm in my demo, and this is not. I just want to show how to do this. Okay, it's just for. Don't follow me along as a trade. All right. So let's say I'm going to put in a limit. So I would click the order type first, which is limit. Or you can, you can go to the trading tab and then select your trade ticket. You can do it through a trade ticket and select your order type here, limit. Okay, so either from the chart or from the trade ticket. So I have it on right here, my limit order. And so let's say I want to get in at, I'm going to buy it. So I can move my capsule wherever I'm trying to get in. So until I find that spot, once I find the spot, I click the mouse once, the left button, and that sets it. Now, even once I've set it, I can still scroll it up and down by grabbing with my left mouse button and holding it and moving it, or I can double click on the price and I can move that up with either the scroll button or the up and down arrows. So let's say I want to put a limit for 22.25. If it comes down to 22.25, buy me 500 shares of X, okay? Now, hold on. I want to do something else before I commit that order. So let me do that again. I'm not gonna push the order. I'm not gonna commit the order yet, because what I want to do is on the other side, I want to place my bracket order. I want to get it ready. Okay, so my bracket order I need to put as a sell. So I'm going to put my stop underneath. So we'll put it at 2209. And then I'm going to put my limit. So I now scroll up to, let's put 2269. Okay, let me show you one more time. So again, I click bracket, I click sell. Okay, I'm going to put the mouse where my one end of the bracket's going to be the bottom end and hit the left button. That's going to set my stop. I can adjust it if I need to. And then I'm going to put the other, whoops, hold on. Let's do that one more time. Sell. 2206, push once and then push again. Okay. So I have my bracket staged. Now, unfortunately, the price has moved up above, but so let's say I want to go ahead and put my limit order in now. Click. I have a limit at 22.24 to buy 500 shares of X. I have a bracket order staged. It's not placed yet. It's only staged. It won't be entered until I actually push the check to send the order, bracket order. Now, if I decide that, I need to move my limit order, I can grab the capsule, adjust it up, and click the M to modify. So now I have my bracket at 22, my limit at 22.28. So if the price comes down and hits my limit, it'll put me in. We'll wait a second, see if it fills. And then once that order fills, and we'll get the confirmation. Once it fills, then we can commit our bracket order. Which is one cancels the other, basically. What it does is if it hits the stop, then it cancels the limit up on the top. Or if it hits the limit, it cancels the stop. It does not allow you to do the more complex orders like the MB desktop allows, where you can do a limit with plus TTO. It's not going to let you do those real complex orders. Okay. Why have we not filled yet? We should have filled already. I don't know why that did not fill. Because technically that should have filled. That's weird. All right, well, let me just mark it in. I don't know why that didn't fill. Maybe, oh, you know what? I wonder if it timed out because of after a certain period of time. No, it still should have filled. All right, I'm just going to mark it in. So you can see we've got the confirmation now. We're in at 22.26. Now I can send my bracket order. So I've got my stop way under at 22.06, and I've got my limit way up here at 22.71. What I can also do is at any point I can adjust up and down the stop or the limit. I can grab the line and scroll it up or down to modify that price. You can see 22.07 and then click the M to modify. And same with the top side. If I need to bring it down a couple of pennies, I can bring it down and then click M to modify the order. Yeah, it filled when I put it in as a market. I don't know why that limit didn't fill for some weird reason. I'm in your trial now and looked at Elaine G's a few times. She is my aunt. I saw Wise Trade a few times a long time ago. Oh, cool. Yeah, so Tim, this order filled. These are now standing orders. The bracket is a standing order. There's a order to either stop out at 22.07 or take profit at 22.69. And then you can see right here that we're already up $10. There's our gain. So Connie, the one thing I don't know is what order types Interactive Brokers makes available to the API on Medved. My guess it's going to be probably the similar type orders here that you'll have the opportunity to do market limit, stop limit, and then probably a bracket order and a trailing stop. That's probably all you'll have the ability to place. So let's, while we're monitoring this, let's talk a little bit about the lines for Tim, kind of answer how to understand the lines. So Tim, the lines measure buying and selling momentum based on price and volume and tick data. And so it is not a price chart. And that's the one thing you'll notice is when I overlay a candlestick, and I can remove those candles, by the way. I can make them go away just to make it a little cleaner. But you'll notice when you have a candlestick or price chart underneath it, that you'll see sometimes where the price goes way below or way above the red and green lines. Again, because the red and green lines are not full price. They're based on, open, high, low, close. There's some volume in there and there's some tick data, but it has a lot to do with open, high, low, close. So it's price, volume, tick data. And then there's a couple other little things in there that we've added. We also have the arrows, the up and down arrows. So the way the arrows work is when the red and green lines cross over, an arrow will appear, but the arrow may or may not may go away until that interval completes. So in other words, if you're on a 3-minute time frame and you still have a minute and a half to go in that time frame, it's not completed yet. Like right now, we have 12 seconds left in this 3-minute. So once that interval technically is closed and complete, then at that point, if the cross doesn't undo itself, then the arrow will lock into place. So sometimes you'll see right at the beginning of a time frame, the lines will cross and an arrow will appear, but then the lines continue to move and the arrow disappears. And that's because of the way we developed it. We wanted it to appear and lock in once the interval completed. And so really what the arrows are, they're a confirmation. It's a confirmation of a completed cross. Okay. Now, if you're looking at a small time frame, like a 1-minute time frame, obviously, and I'm gonna blow this up to full view, and I'm going to remove, the candlesticks. So, you're going to get a lot of arrows and you're going to get some false ones periodically, where it crosses and then uncrosses, or, just because a line's cross doesn't always mean it's going to continue. It's just, it's measuring or watching trend and momentum. Well, trend and momentum in a choppy market is constantly changing. The lower you go on a time frame, the more chop you're going to see. Okay, so especially like a 1-minute, you're going to see a lot of up and down arrows. As you move into the higher minute time frames, you're going to start to see less, and you're going to get less what I call noise. So as you get into it, let's go to a 5-minute. So there's a lot less arrows on a 5-minute as compared to a 1 or 3-minute. But look at how nice and smooth these runs are. So here was X this morning. You had an up arrow this morning, and following that up arrow, it ran from roughly 2030 all the way up to about 2060 before you got a red arrow, which happened to be at support. All right. And then you got the red arrow, so that could have been your signal to exit your trade. And you know, we use a lot of different indicators to determine how to exit our trade. We use the clear lines, and we use pivot points. We like to look at Fibonacci levels. We also look at volume weighted average price, the parabolic stop and reverse. These are indicators that help us not only to get into a trade, they help us to stay in longer, and they help us to get out. I like to look at it or call it, it's more like a roadmap, okay? So like here's a great example, okay? This morning, you had an up arrow on X, okay? That arrow also was right at support 3 at $20 and almost 31 cents. Well, simultaneously, you had parabolic stop and reverse shift from above to below, you know, and when the parabolic stop and reverse shifts to underneath, that's usually a signal of an uptrend. So you had multiple indicators, basically. And then if we added, and I'm on another chart right now, but if you were watching also, hold on. Oh, actually, let me do it this way. If you go, let me go to the 15-minute. So let me add the candle back in, and let me draw the first 15-minute Fibonacci high-low. Now let's go back to our 5-minute, and let's again remove the, okay. Well, technically you really need, if you're going to use Fibonacci, you really need the price chart because that's what it's based off of, price, not pressure. So if you were watching this morning and you had your first 15-minute fib level, and then so then you were watching your 5, and then on your 5 you saw that you got a fresh up arrow, and you were at a fib level when you got an up arrow. You were technically at the 382, and you were at S3. Let me circle these so you can see them. Okay. You had, here's your, this is kind of a confluence. Hold on. You had a confluence of support 3, the 382 of the first 15-minute. You had an up arrow with your clear lines, and the clear lines were obviously clearly showing you a turn back up. So you had a fresh up cross. So you had all the elements for your trade entry. That's what triggered your entry. And then if let's go down to a 3-minute. So on the 3-minute, let me scroll backwards a little bit. So we also had that same cross up right here on the 3-minute. There's that arrow on the 3, right around the same time frame. And then let's look at the 1-minute. Back around, oops. See, this is the other great thing about my software is I can scroll backwards on the day. You couldn't do this on WiseTrade. So again, here's that same time frame. So you had your 1-minute, your 3-minute, and your 5-minute, pretty much all. You got your arrow on the 1, your arrow on the 3, your arrow on the 5, one after the other, boom, boom, boom. which gave you the signal to get into to enter your trade. Okay. You had a confluence of a fib level, a pivot point, a cross of the red and green clear lines with an up arrow. Pretty much you had the full Monty. You had everything you could have asked for. That was a perfect entry. So the next thing is, well, you got to figure out where is this going, right? Because we never know. I mean, we can obviously watch our clear lines, and guess what? The 3 minute, we didn't get a sell or reversal until up near 2180. That was a 50-cent move, 40-cent move. Okay, no, that was a 50-cent move before it showed signs of weakness. And as soon as we got that down arrow, guess what happened in the next time frame? The parabolic stop and reverse change. Now, we weren't at a fib level. We weren't at a pivot point, so we didn't have those. But were we at a level on our VWAP? Because VWAP will also help guide you. So we can scroll back to this morning. And no, because we had actually we broke through VWAP as soon as we got in the trade. So the only thing we could have used to get out of the trade would be manage it with stops, along with right here when you got the down arrow, the reversal of the red and green lines, that was your exit point. That's what got you out of the trade. And then you might have gotten back in, because guess what it did? And let me use this one again. So it pulled back. Now, unfortunately, it went through some chop, but look at that. It was right at the 1618. So it was B bouncing along that, and then it broke out, got to the 200, broke out. So you might have, when you got a couple more up arrows, you might have jumped in again, wrote it up. Let's go to the bigger time frame. Maybe it gave us a clearer picture. Yeah, look at the 5 minute. The 5 minute, once you got that crossed down, you had an up arrow here and an up arrow here. There was no red arrow. You didn't get another red arrow until later today, early afternoon. So the key is to find that time frame to help keep you in that trade. I think a combination of 1 minute, 3 minute, 5 minute, and 15 are the ones you want to be using. 1, 3, 5, and 15. Carl in Houston loves the 5 minute. That's what he uses for his, what he calls the choo-choo train. When something has momentum, like right here, that was momentum. That's what's keeping him in his trades longer. That 5 minute. You definitely want to utilize those intervals: 1, 3, 5, and 15. I tend to use the 1, 3, and 15. I should probably use the 5 minute more often. I think it would help me stay in winners longer and not get stopped out so quick. By the way, we're still in. Let's hold on. Let me go. Oh yeah. Okay. So for setting up fib levels, there's a couple things you need to know. So the first thing you'll need to do, Tim, is go to the settings, go to the dashboard settings. Under charts, there's Fibonacci values. You're going to have to add in these values that I have listed right here, which is the 2618, the 300, the 3618, and the 4236. You're going to have to add that first right here under the settings, okay? And then once you've done that, then you'll have to draw a fib level and then click on where the Fibonacci value is. So hold on, let me show you. Let me remove the fibs again real quick so you can see what I'm doing. So you click Fibonacci, or from draw, you click Fibonacci, and then you go to draw your fib, okay? So when you first do it, you may only have this little yellow line right here. Put your mouse over that line, right click, and you're gonna get a right click. You're gonna have a window pop up, okay? This is the window you wanna see. And you're going to want to make sure you have extend right checked, show line percent, and show line values checked. And then you'll want to go in and check and make sure you have 0, 236, 382, 50%, 618, 786, 100, 127, 14, 140, 1618, 200, and then the new values that we added, 2618, 300, 3618, and 4236. I also have my lines yellow, and I have it set to number 2 for the thickness. And then make sure you click set as default so that that's always what you're utilizing. And then click OK, and then that way you'll see all of that information. So Elaine says on the longer time frame, a bigger stop loss is used, right? Not necessarily. I mean, I think the bigger the where you use a bigger stop depends on the type of trade. If it's a swing trade or position trade, those obviously have bigger stops, much bigger stops. If it's an active trade versus a super active trade, those are going to have a little different stops as well. A super active trade where you're looking to pick up 20, 15 or 20 or 25 cents, yeah, you're going to not have a huge stop on. A general day trade or just general active trade where you're trying to capture a bigger intraday move, you're going to need a little bit bigger stop, but it doesn't have to be huge. You don't want it too big. Always remember, you still have to use risk to reward. And there has to be a real possibility that you can capture a bigger profit than what you're risking. Your levels on your chart are going to help you to determine where those stops will go, and your fib levels will help you to guide you where potential profit targets. Because if you think about it, you know, this morning, if you scrolled back to this morning, okay, so when we got this target right here, when we got this, hold on, when we got this entry, we had no clue what it was going to do, right? The only things we had to help guide us at that time were and I'm going to move back out so you can see it a little bit better. The only thing we had when all we saw was this to guide us was our fib levels and our pivot points, okay? So we knew we had support 2 and we knew we had pivot point right here, or support 1, sorry. We had pivot point up here. All right. And we knew we had fib levels. Well, we had confluence right here. Guess what? Let me get my highlighter. We had confluence of support 1 in the 200 right there. Okay, right in here. Well, guess where it's slowed down in reverse? Just beyond that level. So when it broke above that fib level, you should, well, as it's moving above fibs, you should be moving stops below those levels and trail it up. So your stop would have been somewhere right in here at that point once it broke above there. And then as it came back through, you got stopped out. So that helped guide you to understand where your reward was. So what was the risk to reward on this trade? Well, depends on when we got in, if we put our stop below one of these two fib levels or below the low of the day. So let's say we got in at 2030, okay? Actually, it probably would have been closer to 2050. So let's say it was about 2050. Let's say we entered at 2050 because that was after that interval completed and the arrow locked. So 2050, so we might have put our stop below the 382 at 2029. So let's say we put it in at 2020, okay? 2020, because we're below the quarter. So that's 30 cents. We're risking 30 cents. The target, if we were watching this 5-minute and we saw these fib levels, was around 21.50. So we had a $1 potential reward for a risk of 30 cents. Was that a good risk to reward? Absolutely. That's a 1 to 3. Risk 1 to make 3. Now we didn't know if it was going to get there. It may not have gotten there, but it turned out it was. It may have only gone to S2. If it got to S2, then it was a 1 to 1.5 risk to reward. We risked 30 cents to make almost 50, 40 some odd cents. So a little less than 1 to 1.5. Still acceptable. Definitely still acceptable. But by utilizing, again, the lines, because the clear lines are definitely going to help you stay in the trade. You had the parabolic stop and reverse on the underside. You saw potential target based on fibs and pivots. I mean, it pretty much was the perfect storm. And then you had, well, you were well above VWAP. VWAP really didn't matter because you were so far above it. Does that all make sense? But yes, to answer your question, I do think when you are looking at a bigger, what I call a bigger intraday trend, like a 5 or 15-minute, you're gonna be giving it more room than if you're trading off a 1 and 3 minute. Absolutely, you have to give it more room. Does that work on the pre-market? Put it on Amazon, 2 charts, 10-minute and 2. Yes. So let me clear all this. So he wants to see a 2-minute. So let's go to our custom, put a 2-minute, and let's put a 10-minute, and let's go to Amazon. And you want to see pre-market data, and guess what? So I can go under here to view, well, right there, current day. So I have current day. So let's scroll backwards. There's our pre-market. So actually Amazon was moving down in the pre-market on the 2-minute. And then let's look at the 10-minute. And yeah, it was moving down in the pre-market. But yes, you can get pre-market. I can get post-market too. I mean, I can set it to always, so it'll be after hours and pre-market. What will you use to fib pre-market? You know, I think to measure pre-market, you have to look at either the prior day first 15, you're probably still running off that, or the high low of the prior day. So you could do the first 15-minute. I don't know how accurate that's going to be, or you're going to do the high low. The high low of the hold on. You have to do it a little different to get it to extend. But yeah, actually, look at that. That's interesting. If you were looking at the prior day high low, let's look at this morning. Look where it opened up at the 127. See that? Of the prior day. That was also R3 of the prior day. And it sold off from there. And look where it came down to, the 100 line. It kind of went below it and then bounced off that 100. So I think pre-market, you have to look at the prior day high low. That's all that I could think of. Yeah, Pippin's here. He says prior day. Yeah, you have to use the prior day high low. Glad to see you with us, Pippin. I hope you have interest in my system. So again, there, and then here's your 10-minute. So the 10-minute, you had an up arrow this morning. And then here's the interesting thing. You got a secondary arrow. So that was secondary arrow is more like an add spot. You can use those second arrows to add. So first arrow got you in, second arrow add, and then it ran up, and then you got your down arrow. Probably a little harder to use you'd probably want to use a 5-minute, although you got a little more noise on the 5-minute. Thanks. You have a cool chart there. Use 10 with 2. Yeah, there's the 10. Hold on. There's the 2 and the 10. And I can actually, we can do it like that too. Whoops. Ah. There's your 2 and your 10. And you can go with, again, with or without. Great stuff today, guys. Really some great questions. Thank you, Pippin. I appreciate it. He says it's a great chart system. Do the clear lines work the same for swing or longer term trades? Yeah, absolutely. But well, I will tell you, there is a one major difference. And hold on one second. Let me go back to our X trade real quick. I do want to do something. So we're still in X and we're in a profit. And this is something you would want to do once you're in a winning trade. You want to move your stop up. So, we have our stop down here at 2207. We should probably move it up. Hold on. To at least break even and maybe even into a little bit of profit. Where's the current price? 2240. There we go. We'll protect a little bit of profit there. So, there is a one difference on the old Wise Trade chart system. When it first came out, everything was calendar based. Calendar month, calendar week for the long and the mid initially. Well, it got changed. There was a point in time where they shifted that and went to, instead of calendar, they went to rolling. The weekly chart became a rolling 5-day, and the monthly became a rolling 25-day. Okay. Which kind of smoothed out the charts a little bit. I can't do that with our current system. It is calendar. It's based off of using traditional technical charts. So, at the beginning of a month, the beginning of a week, you don't have as much data in it, and it can make it change a little more fluidly in the first couple days of the week or the first week of the month. Okay. So that is a difference, but they still function. I mean, the trend is the trend. So let me remove, hold on. So let's go to the monthly. The trends are the trends. They're very similar. The one other subtle difference is you'll notice my lines are a little more jagged. They're not as smooth as the Wise Trade red and green lines were, because they had something in their charting package that actually smoothed the lines. And I don't have that with the package that Medved uses. They would have to change out. There is something that they could. It would require a major change, so I can't ask that of them at this point. But it doesn't seem to be really much of an issue. So you're going to see a little more, pointiness versus the rounding. But the trends are still pretty clear on the long, mid, and short. I'll give you an example of like a decent. Let's see. So, here's a strong trending week, right? And there's a strong trending month. And then, of course, there's our day. Can you make the candles price? Candles price, not pressure. In other words, you want me to make the clear lines go away? Is that what you're asking? And just show these are regular candles. These are regular candles. These are regular price candles. Yeah. See, hold on. Right here. It's a standard candle. I can even put a Heikin-Ashi or yeah. These are all the different. I can use Renko, but if you start using some of the other ones, they actually will mess up they have the ability, like Heiken-Ashi will actually can screw up my lines. But yes, these are regular. Now, I just have hollow candles. That's all. But they are standard candles. You're just seeing the way they're being viewed. Like I can change um, the type of candle, right? I just prefer a hollow candle. It makes seeing my lines a lot easier. Makes the chart cleaner. But yeah, these are standard price candles. Um, Tim, one thing I did want to mention. So, the when it comes to swing trading and position trading, obviously market conditions dictate if you're going to find good swing and position trades, and the market really hasn't. We had that big drop the end of last year. We've had a big rise in January. So we've got a lot of messed up trends. We're starting to see clear trends again, and that will give us some good opportunities for swing and position trading again. And we actually have been building a list of good trending stocks that we post. And you've probably seen it if you've been into our on our website, into the blog, the internal blog, Tinsley's swing position list that we've been working on is posted there. And that again that's for the Equity Alerts members. So again, for anybody that's not currently a subscriber that does have interest in the clear lines, if you want more information, a couple things you can do. You can email me directly at kip@equity-alerts.com. I'll post that here. kip@equity-alerts.com. If you want to send me a text message, you're welcome to text message me or even call me. I'm happy to give out my cell phone number. I just posted that as well. And if you go to equity-alerts.com and click on the Clear Lines tab, there's some information posted there as well. As well as where you can sign up. And I do a month to month for $59, or I do a 12-month, buy 12, get one free. So it's $708. So you're basically saving $59. Baker's dozen. And then if you also want our alerts, you can do a combination of the alerts. The alerts are $99 a month. So you're saving quite a bit. You're saving about $30 a month by doing a combination, or $29 a month by doing a combination of alerts and clear lines. And if you do the combo package on the annual basis, we already discount it, obviously, so we give you that extra month if you pay annually. So again, 13 months for the price of 12. So great question, Connie. Connie says, do you send out alerts for Forex too, or just equities? Actually, so we have an amazing Forex trader that is a contributor in our chat room every day. Her name is Elena. You may have remembered Elena from the old webinar. I used to call her, or I still call her, the Pip Princess. She comes in and gives out a lot of her Forex trades. Also, Jim, who is one of my partners, and Lindsay, the Madaket kid, they are both also trading Forex, and they will give out. Jim gives out more. Lindsay will occasionally give some out. But I know Elena is always posting in our chat. I know she was talking about some stuff. It may have been yesterday, but she gives out. She comes in also on Fridays and does about a 30-45 minute session at noon Central, where she reviews some charts and gives some targets where she's looking for entries and whatnot. So to answer your question, yes. I mean, granted, we are mainly equities, but we give out, between Jim and Elena, you're going to probably get 5 or 6, 7 Forex alerts a day. Some days more, some days less. And you're going to get support of traders, a few traders that, if you have questions. We also have Stephen Bilby, an hour a day. He does some options alerts as well. So yes, we are technically equity-alerts.com, but we do give out Forex and options alerts. I'm not sure what you mean by how did he drop last year? Look on clear lines. What do you mean, Tim? I'm not sure what you meant by that. How did he drop? How did the drop look last year? I'm sorry. I'm like, how did the drop? Okay. So we can look at the Dow if you want to do that. We'll look at the historical charts. So interestingly, I drew these trend lines a while back on the Dow on a, did I do it on the month or the week? I think I drew it on the month. So I drew these trend lines a while back, okay, when we started coming down. So you can see on the weekly, we had a top here back in January of last year, and then we had another top back in October. So we had that was a double top, and I drew this line, and we didn't come all the way down to the bottom. Actually, I think the S&P, hold on. Did the S&P get to its bottom? I drew the S&P also. Whoops, that's not it. Yeah, see, I drew the S&P. See how darn it. See how the S&P came right down to that trend line? And we bounced right off of it. And so we've moved back up into this range. But yeah, I mean, did my lines show you the reversal? Yeah. Pretty clear. Oh, let me remove you can even see it clearly. There's your week. That's pretty clear. There's your month. And we just look at this. We just broke back up. We've just cleared and broke up above this line. So we're probably going much higher. All right, guys. That's it. Any more questions? We're about out of time. Again, I want to thank you guys for tuning in. And again, if you have any questions, if you're interested in, if you don't currently have the clear lines and you're interested in subscribing, send me an email. I do provide one-on-one support with the clear lines for those of you that need assistance with it. And if you subscribe to it, I will help you get it installed and set up on your computer. If you need that assistance, I'll help you build a layout, and I will provide ongoing support for it as well. That's why I kind of leave my afternoons open to help you guys out. Tim says planning to subscribe, but after I get back from holiday in 2 weeks. Cool. Well, we're glad to have you with us, Tim, and look forward to having you on. And when you get set up, if you need some help getting your clear lines set up on your computer and help building a couple layouts, I'm happy to do that for you. All right, guys, thanks again for tuning in. Again, this session is twice weekly, Tuesdays and Thursdays, 3 o'clock Eastern. It is recorded. I will be posting this to our YouTube page later today. You can get to that by going to equity-alerts.com, click on the YouTube tab, a button at the top, and you can see I've already got Tuesday's broadcast posted. I'll have this one here in about 30 minutes or so, or maybe an hour or so. All right. Have a great afternoon. Thanks again. I'll see you all next week. Some of you I'll see in the morning. Bye-bye.